Hi, my name is Paxton Kennedy, and today I will be talking to you about credit cards. I would like to begin with explaining to you what a credit card is and showing you the different types of credit cards. Credit card is a small plastic card issued by a bank, business, etc., allowing the holder to purchase goods or services on credit. Now, there are two different types of credit cards. You have your Chases and your Discovers, where you can purchase anywhere, or you have your JCPenney's or your Kohl's, where they only allow you to purchase in store, but they give you rewards so you can purchase other things in that store and get enough points to get free items. How credit cards are used. Using a credit card is like getting a loan. Every time you charge something, you're borrowing money until you pay it back later that month or over time. In exchange for this loan, the credit card company adds interest charges to your account, which you must pay along with the purchase amounts. Some advantages of having a credit card are purchase power. Credit cards can make it easier to buy things. If you don't like to carry large amounts of cash with you, or if a company doesn't accept cash purchases, for example, most airlines, hotels, or car rental agencies, putting purchases on a credit card can make buying things a lot easier. Another advantage is you can protect your purchase. Credit cards may also offer you additional protection if someone or something you have bought is lost, damaged, or stolen. Both your credit card statement and the credit card company can vouch for the fact that you have made a purchase if the original receipt is lost or stolen. In addition, some credit card companies offer insurance or large purchases. If you buy something with cash, then you have no proof that you ever bought it with the exception of a receipt, and we all know receipts get lost a lot. Some disadvantages of having a credit card are it's easy to blow your budget. Most credit cards do not require you to pay off your balance each month. So even if you only have $100, you may be able to spend up to $500 or $1,000 on your credit card. While this may seem like free money at the time, you have to pay it off. And the longer you wait, the more money you're going to have to pay. Companies also charge interest if you don't pay off your borrowed money at the end of each month, and then it keeps stacking on, and you end up owing more money than you could ever possibly have. High interest rates and increased debt also come along as a disadvantage with owning your own credit card. How to acquire a credit card, especially at our age. Now, we're going to all say that we're 18 here because you can only apply for a credit card when you're 18. 18 is the liberal age. You're a legal adult and you can vote. You may be going to college soon if you're not already there. And you can get a credit card as eager as you may be to get your first credit card. Many credit card companies aren't so eager to give you one. Rather than putting in several credit card applications to see who's going to approve you, target just a few companies that are known for giving credit cards to first timers. Getting a job is very, very important. When you have a steady income, you can start out by getting a credit card, when you want to apply for a credit card, if you have a job, people look at you have a steady income, and they figure you are able to pay your borrowed money every month, so they're not worried about you losing, or they're not worried about you not paying. You can also get your parent to co-sign on a credit card. And what does that mean again? Just tell me quickly, this is the main one.
You can have your parent co-sign, which means they'll back you up if you don't pay it off, just to help you start.
If your parent co-signs, they can help pay off your debt and back you up in case you don't have the money to pay off that debt / borrowed money. Some risks of owning your own credit card is overdoing it, borrowing more than you can afford to repay. If you don't make your payments on time, you'll damage your credit record. Losing money on late fees is a big one. having to pay additional interest on top of what you already owe, difficulty getting loans or credit in the future if you don't pay back your money on time, because then your credit score goes down and you'll have a hard time applying for a loan on your house or a car, or maybe you want to start a business.
And then say once your credit rating is low,
and once your credit rating is low, it's a terrible time trying to get it back up because it would take forever. Interest. Credit card interest rate is the price you pay for borrowing money. For credit cards, the interest rate are typically stated as a yearly rate called APR. Most cards, you can avoid paying interest on purchases if you pay your balance in full each month. Your credit card purchases are subject to a standard interest rate, which is, like I mentioned, the APR. The number will vary from card to card. Some have higher interest, some have lower, and person to person, depending on the factors such as credit scores. Your APR is expressed in terms of a year, but credit card companies use it to calculate charges over your monthly statement period. So, like cars going miles per hour is a way of measuring speed over an hour. APR measures interest over the time period of a year. Credit card fees can be expensive and that's my phone, and annoying. There's no doubt about it. But many of them can be avoided if you are careful, and others may be worth paying if you get something worthwhile. For example, many of the best rewards credit cards charge annual fees, but people who use them frequently are able to earn additional rewards that outweigh the extra cost. Gosh dang it. Given the variety of different fees that credit cards are known to charge, the differing situations in which they apply, how quickly they can add up, and the corresponding implications for your account credit standing, it's definitely worth familiarizing yourself with the ins and outs of these pesky charges. Some of those being basic account fees, usage fees, penalty fees for not paying on time, customer service fees, credit card fees for businesses, and just paying credit card fees. Your credit score. The credit score is a 3-digit number used by financial institutions to evaluate your credit worthiness or the likelihood that you'll pay back your debts. When a consumer applies for a credit card, mortgage, student loan, auto loan, or other line of credit, a lender usually pulls a credit score to help the lender decide whether or not to extend credit. If you have a low credit score and you need a loan from a bank, odds are they will not give it to you. You would have to get it either from what's that place called? Can I put a financing place? I don't know.
Yeah, maybe a financing service.
Financing service, credit unions sometimes. And if you have to take the low road, you got to go with a loan shark. But you probably should never do that because that can end up biting you in the butt. Well, I hope you learned a little bit about credit cards because that is all I know. And that's all I got. Yep.
I will be finishing my video by talking to you guys about identity theft. So identity theft is when someone takes your credit card physically or just takes your credit card number and makes purchases under your name without you knowing. Ways that this could be possible is if you ever enter your card online, make sure that in the top left corner it has a little padlock and the HTTPS, is that make sure that the website is secure. Another thing is if you give your credit card to someone in a restaurant, they can go back and trace the numbers. But you will immediately know when your credit card is stolen because most times people make small purchases to see if they can get away with it, like 50-cent purchases, and then just keep doing it. And then your credit card company will probably call you and talk to you about this to see if you've been making these purchases, in which you can deny it and they will send you another credit card. Another way your credit card can be stolen is if you're in a foreign country. It can be stolen and you can call and shut it down. But if you go to a foreign country, you might want to call your credit card company and tell them, so that when they see that you're making purchases in, say, Costa Rica, that they know it's you in Costa Rica making those purchases and not someone that stole your credit card and flew off to Costa Rica. So that is all I have for you on the credit cards. I hope you enjoyed this video, and thanks for watching.